Let's talk about something that e-commerce founders should be thinking about, but aren't. Most of you are focused in on gross revenue, ROAS, profit margin, and cash flow. But what about those items that don't show up in your financial statement? I'm talking about your non-monetary assets. Things like your intellectual property, your team, vendor contracts, tech stack, and brand reputation. These are the invisible drivers of your company that provide value when you're looking to raise money and prepare for an exit. Let's think about IP. If you don't have your brand, logo, and proprietary content trademarked or protected, you're leaving yourself wide open. Competitors can bid on these keywords and drive up your ad costs. But in addition to that, they can dilute your brand value very quickly, creating a financial risk for you. And how about your team? Everybody believes employee retention is just an HR stat. But when investors and buyers are coming in to acquire your business, they're looking at items like employee retention to identify brand stability, operational structure, company culture, and management and leadership. High turnover indicates that there's a break or a fracture in one of those, and that it's a higher risk business as a result. And how about your customer and vendor contracts? What is it with all those lengthy legal jargon provisions? Exclusivity clauses, onerous termination clauses. Those items can cost you hundreds of thousands of dollars by locking you into contracts that you didn't even know you were being locked into. And that's where a strategic CFO comes in. They quantify these intangible assets and track them so that you can continue to grow their value. When we optimize these items, we can increase our company's value for later exits. So if you're wanting to build an investable, sustainable, and sellable asset, then you need to invest in your brand and these non-monetary assets. You want an audit of where you are? Download our resource at fullyaccountable.com.